Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, October 28th. And as always, run your video player at 1.25x so you can get through the material faster. Quick look at futures. Equities pretty much flat. Oil's down again 1.3%. Nat gas was pretty much flat, and precious metals were flat as well. Looking over on the macro front, we got a big day today. We got GDP print. We've got jobless claims, pending home sales, and a 7-year bond auction. And remember, that 7-year maturity has been a little more problematic than some of the other more common ones, like the 5-year, 10-year, 20-year, etc. So we've had a lot of activity. I'm going to go over it. We have had a lot of activity in the bond market, not all of it good. So that's going to be something to keep your eye on around 1 o'clock. And then, of course, over on the earnings front, before the bell here this morning, I picked out 3 to look at: Shopify, Caterpillar, and Merck. There's a lot of other ones, not as big a marquee names. But then everybody will be poised to watch Apple, Amazon, what do I got here? Starbucks, U.S. Steel, and Western Digital tonight after the bell, of course, with Apple and Amazon probably grabbing most of the headlines. I'm sure Starbucks will work its way in there. So just quickly, gonna keep it in gear this morning. I think I told you it's right past 6:30. It's 6:36 now. U.S. dollar chart. This 93.50 area held. So now we're toggling between 94.50, 93.50. I don't think you're going to see a lot of dollar-based fireworks until that range either breaks out or breaks down. And if you're new to the channel, thank you so much for spending some time with me. Hit the subscribe button and the alarm bell. You'll get all my content. And then if you go over in the blog or over in the show notes, you'll see a link to the blog site where you can drop your email into, and then you can register for all my content. And here's a little extra instructions. It's a double opt-in, so a lot of people get a little derailed because that email gets sent to your junk folder and then they never see it, and then they wonder why they didn't get registered. So always check that if you don't see it, and then you'll be all set. Anyways, 10-year yields, big move the last mostly yesterday. On Tuesday we had a little dip, but it was contained here in the low 16s. And now yesterday it just dumped. And I don't know if the 5-year, we had a 5-year auction yesterday at 1 o'clock too. All I can think of is there was an acceleration at that point of a trend that already started. So now, just like as far as our charting goes, the same principles apply. What I mean by that is now this break above looks fake. We were inside of this range, then we broke out, and now we've fallen back in. And just as we talk about on a regular stock or any instrument, once you break out of a range, then when you come back in, it's a bearish move, and your default target is the opposite side of the box. And that's what's happened here as yields have moved down. So we've got a support level here at 1.5%, and so that's going to be really important area to watch. And if rates are going down, TLT is going up. We had this move down here and a kickback and then a move down. I thought it was going to keep going down here for an ABC move, but what happened was we ended up getting, wasn't perfect, but look, maybe close enough for government work, sense of double bottom low down here in the low 141s, and now we've popped back up above the 200, above the 50. And like I just said, anytime you recapture moving averages or key levels from below, it's bullish. So now we left the range. Now we're back in the range. So just from a technical standpoint, I'd expect TLT to drive higher. We've got a big resistance level right here, though, right above at like 149.25, 149.50 area. So we'll have to watch that really, really close. And of course, yesterday VIX took a pop up. We bottomed out down here at 15, like we talked about, 4-month lows, and now we popped back above 1575. And now we're pushing 17. So now our next level of interest above is 18. And so we certainly want to keep VIX contained between 16 and 18 to at least stabilize. And we don't, if we saw VIX pop up over 18, we're going to be seeing a lot of red on the screen. Let me put it that way. So certainly dial in the VIX and keep an eye on it. I wanted to update you on the oscillators this morning. Here's the NASDAQ oscillator. You can see that we really didn't make much progress to the upside, and now we're down from yesterday, so down in the middle of the range, not predictive at all of any future moves. Now here on the New York, we did make a little run up towards 48, and now we've reversed, so back in the range again. But on this one, at least, we had some precedent here. Hasn't been overbought since late 2020. And so here it reversed yesterday and moved down towards the middle of the range. So not that helpful at this point, other than to know that, it's in the middle and can go either way. Looking at the equal weight SPY, bad day at the office. No other way to put it, down 1.33%. And we had this was our prior all-time high back here at 157. We went through our little 3-week corrective phase, and now we broke out, and now we came back, but we lost that level. We lost that 157. And so remember what I just went through that discussion with the rates, that this is not a good look. Why? Because we took out the old high, which made all of this support. We broke out, made a nice advance, and then now we closed back below. So that makes this recent cluster of candles makes it look fake, doesn't it? You can, we came out, now we came back in. Now let's look on the bright side. We're still above the 20, and obviously we're above the 50. So we do have support nearby, and we've got a level here at 155 that I think is going to be important. It's the first big volume over price bar that we have, and I think that's going to be an important level. Come down here if we need to come down here, tag the 20 undercut it a little bit, tag this 155. You may see like a reach down tail, go down and tag that, and then find support and then bounce. If we get a move below 155, I would be concerned about that. That would probably give us a bear cross on momentum. That would probably have RSI dropping below 50, and that would be short-term bearish. And I would expect price to come back down, tag the 50, and then possibly fill this open gap from the other day. You can see here that on SPY we were only down 0.4. Why? Well, you got Microsoft and you've got Google making monster moves yesterday, and the rest of FANG doing okay. So that big market cap weighting is really what held SPY up. And you can see here that we're still really well above the 8-day and the 20 and the 50. We're all bullishly stacked, and we have held the all-time high breakout. So on the SPY cap weighted, SPY, regular SPY, I think you want to key in on 452.50 here, right above the 8-day. That would be certainly nice to hold and get a bounce. But if we lose the 8-day, then we're probably coming down to 447.50. And you can see these levels here. Really bad close. Coming down here, there's a little level at 453.5, but then the big levels come in at 451, and then that 447.5 that I talked about just a second ago. And so what I did here is drop in the fibs, as we've been talking about, and so we can see that with the fibs in place, where could we look for a solid bounce location? And if we go down to the 38% Fibonacci retracement, that aligns perfectly with this 447.50 area, which would have this little corrective move, come back here, fill this gap, and then look for support. If that doesn't hold, then we've got a half back long down here at 444.50. And then, of course, we've got this gap fill and then the 50-day EMA coming in there. So there's a lot of confluence levels to look at below to see where any kind of, if we do get corrective action, where that reversal may take place. Not going to spend a lot of time on this chart, 30-minute. You can just see the levels below. On your own work, you can drop in that fib. It's going to be the same locations. You'll just get a little bit better resolution on it if you drop that in on the 30-minute chart. Here again, I want to show the equal weighted Qs, which we haven't talked about lately. And I wanted to point out a couple of things. Down 1%. That's, a decent sized bearish day. But look at the posture of the charts. We do have a rising channel, but here at the top we had a high back here in early September. We revisited the bottom of the channel. That's fine. We just went through that. But when we came up back here to the top in the last day or so, we could not take out the all-time high. You see it got rejected right at that level. And what makes it a little bit more troubling is you have bearish divergence in place at the point of the second high. So from a technical standpoint, this is a classic double top. Why? Because at this high, you've got a momentum location here and RSI here, And then when you come back up to the same level, momentum is lower and RSI is lower. That by definition is a double top with bearish divergence. And so we got to watch this like a hawk, because what that would tell you is unless this high can get taken out, chances are we're going to come back down here at least to check the bottom of this channel, and most likely to check this prior low back here at 81. So we got to watch the equal weight really, really carefully. Much more, of course, much more reflective of the average stock than QQQ, which is the cap weighted one. But even here you see we had the prior top with PPO here and RSI here. Now we came back yesterday, looked like we had broken out, which we did, but then they faded it into the close. So we've had 2 consecutive candles that have broken out to new all-time highs, but then they faded it. So we are still back below the prior high, but with lower momentum and lower RSI. That's a double top. So we've got to watch that carefully. And if you wanted, this is certainly an objective place to put on a short. Why? Because we've got the double top structure with bearish divergence in place. We are right near the high. I mean, we're, $1 off the high. So you risk $1 or $2, depending on where you set your stop above. And then if it does play out, you got a great trade location there. Now, I don't have any short position on, but certainly thinking about it, I'm going to wait and see what Amazon and Apple do, because they have the potential to, well, just rip it the other way, like Microsoft and Google did. And then if that happens, you'd get stopped out immediately after hours, or tomorrow, the next day, if those 2 big mega cap names take off. So I'm going to let that clear, let the dust settle, and then figure out what we want to do on the QQQ indexes. Here on the 2-hour, I think today you want to just key off that pivot that we used the other day, from the standpoint if we see any down move, you certainly want to see 378 hold right here at the midpoint of the channel and this prior low, and then see if there's a bounce that you can buy on a break back above 380 and a break back above 382. Here you can see that 378 level being really important here at the midpoint of the channel. IWM, big disappointment to me. I was thinking it would really perform, and it hasn't. It broke the channel and has more or less moved in a straight line right back down to the 50 EMA. Remember, the gold is the same level as the 50 EMA on the daily chart. So now we're sitting on the 50. And, if it breaks and gets below the 50, then you've got it's already a bearish chart. But once you break below the 50, then, like we always say, nothing good happens below the 50. Then you're looking at a gap fill here, and then your big support level at 221.50, and then after that, on down to test these other lows. Here's just a little bit closer resolution on it. We're here midway through this open gap. At this point, I would think it would just go ahead and fill that gap and then decide what it wants to do at 222.50. But if that fails, then you're looking at $1 lower. And then if you go back in the chart, the support levels just go right on down. Facebook is also on the raggedy edge. We talked about this yesterday in quite a bit of detail. You got your A leg down, your little bear flag breakdown. So we're testing the prior lows here at 312. You lose 312. I think you're going to 300 right away. I want to show you the daily chart. Here it is. Here's the level where we're at, 312. And really nothing below 312. I think you're going to come back down here to at least 300. And if the rest of the cues start to wobble or fall apart, you could see 285 very easily, because if this level at 300 were to fail, then your next level's 285. And if you think about it, here's your big first leg down. Here's your little kickback rally. And if you put a measured move on that, you can visualize that it points down towards 285. So Facebook is really living on the edge here. And don't forget, I didn't point it out, but now all the moving averages are bearishly stacked. You've got the 8 below the 20, below the 50, and now price has lost the 200. So it's below all the moving averages. And then what you're going to see in the days ahead, almost regardless of what happens with price, is that the fast moving averages will move below the 200, and then you've really got a bearish setup. Nothing to talk about on Apple, just suspended animation ahead of earnings tonight. So if you had got a break here of 148.50 today, if there's some kind of sell-off into earnings, that's where I would have my alarm at 148.50 or maybe a little bit below. And if you see something, dramatic happen ahead of earnings, you can certainly take your short there and try and get a big move into the print, and then of course get out before the earnings announcement. Tesla, after its big move on Monday, it's in this consolidation pattern. If you're long, you really got to see that 110, 1,100, or excuse me, 1,010 hold, 1,015 hold, right in that area. You can see it here. That's the 38% retracement level. You can see where that level was tested on 4 consecutive candles. That should give you some really good support there. And if I was long and I've been holding my position, of course, time frame is everything. But if you lost this level here, then you would have to look to the downside towards 993 and back to 970 for areas of support on Tesla. Microsoft had its big day yesterday, gap up. I've laid on the fib retracement levels. And I think you do have, I didn't mark it here, you do have a little level here at 322 that you could drop in on your charts where you would expect a little bit of support. But if that fails, then you're going to come back to 320. And you can see that was the last stop at the station, if you will, on a comeback, because below 322, or excuse me, below 320, you've got a big void in the chart. So you would expect a move back into here. But really, really strong, really, really strong. Amazon, not so hot of a day yesterday, but here ahead of earnings, I think 33.80 is your pivot. You've got some clear levels above to take a look at. You've got an open gap below to take a look at. If you were to lose 33.80, I think you're going to come right back down here to test this gap at 33, 48-ish kind of number. And then, of course, anything can happen after the bell when it reports. Google, big day yesterday. We talked about it on last night's video. But if you happen not to see that, lots of places to buy yesterday. If you were attuned in at all, you had an opportunity to buy at the open, reclaiming these levels from below. There was a buy, gap fill, breakout, a buy taking out this prior high, and then we've had levels from back in the chart that were reclaimed. So on all these occasions, they were technical buys. So there were a lot of chances, is what I'm saying, yesterday to get into this, and it just never looked back. So now today, if you were to see a pullback into 2,900, then I think that would be a place to make a stand, because, see if this will load for me. 2,900 was the prior all-time high. So just like the other stocks, you want to see that hold. And as long as that holds, all things are bullish. But look at the bearish divergence. Even though this was a monstrous candle and a great move, it's back at the prior high, even a little bit above, but at much lower momentum and much lower RSI. So if you're long, even if you're long on the daily time frame, keep an eye on this, because you don't want to get into a situation where you've got a double top and then things start falling apart, and this just comes back down here, because then we could find ourselves back here at the 200 if things just kind of fall apart. Coming down the home stretch, Netflix, you got a support level at 660. You want that to hold. I've dropped in the fibs for you to take a look at. Below 660, I think 650 would be your next downside support level. And then bad day at the office for semiconductors yesterday. I think you got to get over 270 to get back on the right track here. So let's watch that. You've got a support level here at 267, and then you've got another one at 265 where you can look for bounces to get back on track. But pretty poor close there, I'd have to say, after moving up in the morning, just rolled over pretty hard. So wrapping up, just some thoughts. Our resource trades have gotten killed over the last couple of days. I mean, oil has really pulled back, copper, a lot of those base materials, just a snap rug pull, really. And I think we've got to be really, really careful here with the potentials for double tops all over the place in the Qs. It's going to come down to FATMAAN, as it always does, on the QQQ cap weight. But I want to keep an eye on these equal weight indexes to see and get a read for what's going on under the surface, because with the wild moves on rates, it's definitely affecting things. It's getting a little unstable. And don't forget, we've got the FOMC next week. So we got a big macro thing, and I'm not saying this is going to happen, but it has the potential to happen with the inflation the way it's running. Like, what if the FOMC said something like, we've decided to accelerate the taper. So instead of tapering 15 billion a month and winding down the QE program like June of next year, we're going to double that. We're going to go 30 billion wind down a month because of inflation. We want to get back on track. We feel like we're behind. They're not going to say all that, but if they say, we're not going to do 15, we're going to do 30, that just means you're going to be done in 4 months because, they're buying 120 a month. So if they say we're going to 30, that means we're going to be, and then they could say, and we're starting now, that means we're done in February. And then they would be able to raise rates. So I'm not saying that's going to happen. I'm not even saying that's probable. I'm just saying it's a wild card scenario that the probability isn't zero because Bank of Canada yesterday, they just stopped QE. They didn't wind it down. They just said we stopped, effective right now. So, and look around the world, lots of central banks have already been raising rates. So from that standpoint, the FOMC is still, in the starting gate. So, and with inflation running the way it is, they may feel some pressure to kind of get off the dime and get things going forward. So, as always, keep your head on a swivel. I hope you found the information helpful. This has been Chris Buss with Trader's Profit Compass. Talk to you next time. Have a good day of trading.